Okay, here we are with Dan Morehead of Pantera Capital. Dan, thanks so much for coming on the Defiant podcast. It's great to have you here.
Hey, thanks for having me.
So, brief intro. Dan founded Pantera in 2003 as a global macro hedge fund. And in 2013, Pantera began investing in Bitcoin, so pretty early on for crypto. Today, Pantera is one of the biggest crypto funds, managing 3.8 billion. And previously, Dan was head of macro trading and CFO at Tiger Management and began his career at Goldman Sachs. So, Dan, you were one of the first major hedge funds to buy Bitcoin. I mean, 2013 is pretty early days. I'd love to go through your thought process. What made you shift your focus to Bitcoin in the first place?
Yeah, so my career's been in global macro style investing. Lastly, as you said, it was a Tiger Management. We fly around the world, go to different interesting capitals, and try and find trades that were very asymmetric and looking for disruptions. Sometimes they're technology, like Tesla Motors. Sometimes they're political, like Russian privatization. But trades where your downside is much smaller than your upside. And, those trades were all interesting, but they were specific to one country or maybe even a region, but that was it. And typically just one asset class, like just bonds or just equities or something like that. So in 2011, I started thinking about Bitcoin, but it took a couple of years to get my head around it, but ultimately came to the view that it would be the biggest disruption in my career and the most asymmetric trade. And that's really the thing that I was thinking at the beginning is that, there's a lot of ways that Bitcoin could fail, but, if it worked, it would be disrupting such valuable things like, wealth storage and cross-border money movement, things like that, that it had enormous upside. And I still believe that. I think, although we've come a long way in the 8 years since we launched our first fund, it took 50 years for the internet to get where it is today. I think it's going to take decades for this thing to fully build out. So it's really exciting. We're really at the beginning of something that's very important. And then the other reason I'm excited about it is it's not just money. I think we're going to make some good returns. We're going to help some investors get, better IRRs. But it really is changing the world for the better. And ultimately, I think there's going to be billions of people using Bitcoin and other protocols. And that's going to help them save money, help them have their wealth not be confiscated by their government, help them, not pay exorbitant remittance fees. All those things are, huge positives that Bitcoin and blockchain is bringing.
So back then, were you in 2013? Did you shift Pantera completely into crypto, or was it more gradual?
No, I fell down the rabbit hole, and I haven't bought anything other than crypto in 8 years.
Oh my God!
I have old friends like Mike Novogratz will call me up. What do you think of the Brazilian real or something? Like, I have no idea. Like, I don't, I don't study anything. Even the S&P 500 or big things like that. I have no idea where they are or what the value is. So it's 100% crypto, and I think. It is that important that, at least for my career, I'm devoting the second half of it just to crypto.
Oh, so interesting. Okay, so I'd like to dive a bit deeper into Pantera and how it's made up. So you have the original Bitcoin fund, which you established back in 2013, but you also have other funds. So there's the Liquid Token Fund, which holds tokens including ETH, Maker, Aave, and Uni. The Early Stage Fund, where I see a lot of kind of ETH, like layer one competitors, Polkadot, Near, Avalanche. And then the venture fund, which I assume it's like more like also equity investments, right? So there's Brave, Coinbase backed Wire. And this year you launched another fund, a blockchain fund, which I understand has exposure to all of these funds. So just to start digging into all these, which of these funds has performed the best so far this year? And by how much has the top performer gained?
Yeah, so it's a fun question. And it's one of the reasons we're launching a new fifth fund. Having launched the first crypto fund in the US, it was just Bitcoin. And then we did just venture. And then we did just early stage tokens. So by kind of the virtue of being the first to do all these, we ended up with 4 completely separate funds. And any asset can only go in one of our existing funds. So they're essentially mutually exclusive. So then you get the question of which one performed best. That's a fun question to answer. But then obviously one of our 4 funds has to perform the least good or the worst. And asset allocators don't like that. They a lot of them would like to allocate to the concept of blockchain, but they don't want to pick, is it Bitcoin or is it DeFi or is it equity? So that's why we are launching a new fund that includes all those different asset classes. But to answer your question, our liquid token fund has performed the best this year. It's up 322% year to date, and Bitcoin itself is up 56%. And then our early stage token fund is up 260 for the onshore and 360 for the offshore.
Wow. Okay. So I guess like the worst performer is the Bitcoin fund, and then the other kind of altcoins, but I don't like that word, but non-Bitcoin tokens are outperforming kind of the OG.
Yeah, this year, other tokens other than Bitcoin have outperformed. And then we can add some value by taking risk off before the market falls and then adding it back at the bottom. So some of the performance of our liquid token fund is we took a lot of risk off in the middle of February, and then there was I think 27% correction at that time, and put some risk back on. So some of the value is from actively trading.
Got it. Yeah, I wanted to get into that because, crypto is so correlated to Bitcoin. And it seems that especially when the market is volatile, it becomes even more correlated. So as a fund manager, how can you actually provide alpha? When you have like these 5 different funds, like how do you manage to differentiate the value proposition of each one when every token trades so similarly?
Yeah, so on the second question first is to differentiate them. Since our 4 funds do trade mutually exclusive things, so if it's an equity, it has to go in our venture fund. If it's a liquid token like Ethereum or Bitcoin, it has to go in the liquid token fund. And if it hasn't yet started trading, it has to go in the early stage. So historically, we've had mutually exclusive funds. We now want to have this all-in-one fund so that we can trade these big swings between value. And we've just seen it in the markets. Tokens reset instantaneously, for better or worse. And just recently, they came off 55, 60%. Whereas venture is very slow moving. People are still doing term sheets from 3 or 4 months ago. Entrepreneurs still want the prices and the valuations they heard 3 or 4 months ago. So venture evolves very slowly. It takes 6 or 9 months for the prices to reset. And so in this new fund, we're able to buy tokens when they're cheap, like we did at the end of June, beginning of July, when they were very cheap, and then ultimately sell them back out, when tokens are expensive and venture is cheap. It allows us to balance between those two.
Got it.
So the first half of your question,
just how do you generate alpha when everything is so correlated?
Yeah, so that is a great question. It's not as correlated as it seems. People do have the view that, everything does go up and down together. And for very short periods of time, that's true. But, over multiple months or even years, things really do trade very differently. We have new tokens that are in the top 5 now that weren't even in the top 5, a few months ago. And those do change quite a bit. So there is a lot of alpha opportunity by being in the right tokens at the right time. And I think you've seen, over the last 4 or 5 years, there'd be fun stats to calculate how many different tokens have been in the top 5. It's been an amazing amount. Obviously, Bitcoin and Ethereum have been in the top 5, but those other slots changed quite a bit. And even just a very simple metric is Bitcoin dominance, the percentage of the entire market cap that is Bitcoin. That changes a lot. In January, it was at 70. It touched 39% a few months ago. Now it's at 44. And so, that's a very good indication that things don't all go up and down at the same time. Some things, ebb and flow. We also follow a stat, which is the percentage of the market that's not Bitcoin or Ethereum. Those two are, very, very dominant. And in January, that hit only 16%. So, Bitcoin and Ethereum were 84% of the entire market, and the other 5,000 coins were only 16. That's now up to 37%, so it's more than doubled. But that's a good indication that, things don't all trade the same. They go, different things come in and out of favor.
Super interesting. Before I get to the question of like how you make sure that you're picking tokens that will be in the top 5, just want to get the question on how much you raised for your blockchain fund.
Oh, yeah. So we are going to be in the market for a year from now until March of next year. And in the first 3 months, we raised a bit over half, I think about 350 million. And then most of the institutional investors we're talking to, they're probably going to need 6 or 9 more months to do their work. And so we'll know the ultimate size of the fund in March next year.
Got it. How, do you have a target for it? How big do you
We originally
want it to be?
targeted 600 million. That is about 15% more than we currently manage, so it's a number that's doable. And frankly, we picked a number that we thought we could raise without an enormous amount of the investment team's time. The markets are stronger than we anticipated. We didn't think we'd raise over half of it in the first 3 months. So I would think we're going to ultimately end up with an amount that's larger than our target.
Oh, interesting. Okay, so back to the question I had on kind of the top tokens. What do you evaluate on your investments, on your liquid token investments, to make sure that you are that you are holding those top ones?
Oh, so, it's fun that you ask it that way. Is we do own some of the top tokens. We own a lot of Ethereum, and we've owned Bitcoin in big positions over the years. But we're not trying to replicate the mega caps, and we're not trying to be an index. And so we often actually own a lot of the kind of numbers 20 through 100, if you will, of the list of most popular tokens. Our industry normally has an enormous amount in the top 2. As I said, it went up to 84%. And then it really has another 30% or so, sometimes, or, in the next, kind of numbers 3 through 10. And then very small amount of the market cap is the tokens, 11 through 100. That's where we see a huge amount of the value. Those are the ones that can go up, much more than the mega cap. So we've historically been underweight the 2 biggest, Ethereum and Bitcoin, and massively overweight the smaller tokens, the ones, like the polka dots and Filecoins of a few years ago that nobody had heard of, but then ultimately will become very valuable.
Right. I guess that's. I guess I should rephrase my question. How do you pick those small cap tokens? How do you? Because obviously, those are the ones that have more potential to grow faster than the ones that that are larger, in theory. So yeah, what do you look for to make sure you're picking kind of the biggest gainers?
Sure. So, it's similar to venture, early stage venture investing. We're looking for, really strong team that has a product that, is even doable. There have been a lot of white papers that we think are literally impossible, that even if they had 1,000 developers in 1,000 years, they couldn't actually build what they're promising to do. Looking at the market size, making sure it's a product that, is large enough. Obviously, the valuation matters, that if it's a great team and a great product, but the valuation's high. There have been a few projects that have been valued in the multiple billions, and it's really hard to 100x from there. And then the last thing that is unique to cryptocurrency protocol investing is you have to make a subjective guess as to whether the development team is going to be able to build a community. Mm-hmm. These are open source pieces of software. Just having a really cool widget isn't enough. You have to motivate other people to build on it, to improve the code itself. And so we're trying to make an assessment of whether the team's going to be able to motivate and rally people behind it. And, I think, the Ethereum community is a really good example. There's enormous passion on that community to build and develop. And we're looking for projects that can do that.
Oh, so interesting. Community, I think, is a really important aspect to protocol building, and something that maybe wasn't considered as much in Web2 investment, where you just need or just need the right team. So, what are good indications for you that a project will be able to rally a good community behind it?
Yeah, it is subjective. We've met a ton of entrepreneurs, and we're trying to get a sense of, whether they like communicating, whether they like building, a broader base. And like you said, in a lot of Web 2.0 applications, if you build a really cool product and launch it, if people, if the consumer is using it, that's all that matters. You don't need other people to build other applications on top of it. Where in blockchain, you do need to motivate people to build things to make your blockchain useful.
Yeah, it's a different thought process, I think, and just different business model as well. I want to get into your thoughts on DeFi. So you've said before that you think decentralized finance is one of the biggest opportunities in the blockchain space. So why do you believe that's the case?
Yeah, I think that a way to think about it is the other protocols of the internet have radically changed everything else in our lives, commerce, communication, everything. But finance really hasn't been touched by the internet. Banks still operate basically the way they did potentially centuries ago. Credit card companies still charge the same rate as 1958, and remittance companies are still doing the same thing they've been doing for 140 years. So it's, the internet really didn't come to finance, and that's basically what blockchain generally is, but DeFi specifically is bringing the ability for anybody with a smartphone to interact with anybody else on earth with a smartphone and not pay an expensive middleman. And those payment rails are actually really expensive. 300 basis points for a credit card transaction is really crazy in this century. The average remittance cost is 8%, which, for people in finance, it's just a number. But for the migrant, it's a month's wages. They have to spend an entire month working to pay their remittance company. So the promise of DeFi is to connect people that want to borrow money with people that want to lend money, or people that want to buy a security or an asset, digital asset, with people that want to sell a digital asset. And those are massive market opportunities. A good example would be, we've been investing in DeFi since it was, kind of just a white paper, and there was really nothing actually happening. A year ago, finally things started clicking over and people started using it. So we're really excited. There's 100 billion of locked up DeFi now, and that's so exciting because it's so much bigger than it was when we got started. But there's 100 trillion of bonds out there, so there's an enormous opportunity for DeFi to intermediate between borrowers and lenders.
So how big do you think DeFi can actually be? Do you think it can completely take over the traditional finance, and so the 100 trillion that's out there in bonds will be replaced by on-chain securities, for example, and same thing with equities, same thing with all the other assets?
Well, I think it's going to take a big market share of the existing legacy business, but the exciting bit with new technologies, they always create opportunities you didn't even imagine. So I think you're going to see DeFi take, a good chunk of the market share from the existing borrowing and lending systems, but also there'll be new ways people do business that we aren't imagining yet.
Totally. With DeFi, how are you investing? So I know you're buying kind of tokens of DeFi protocols themselves, but are you actively involved in staking or yield farming or governance? Like how involved are you?
Yeah, so I would say that the answer is, we are involved in all those things, but our main focus is trying to make returns on the token itself. And if you think about it, on our 8 different funds over 8 years, our average IRR is 110%. So we're trying to make, triple digits returns on the token itself. And then staking, yield farming, other returns are as additive, or they're nice to have, but they normally don't drive the initial decision. And then once we're investing in a protocol, we're certainly trying to be as active as we can on governance, staking. We're trying to be as positive in the community as we can be, but it's normally not driving our decision. I'm sure in time there'll be fixed income type funds that form the blockchain ecosystem. That everything we're doing is replicating what's being done in the normal fund management community, and so I'm sure one of our peers is going to soon have a kind of yield-based cryptocurrency fund, and there'll be a whole fixed income market. We're not actively looking to do that ourselves, but I think someone will do it in time.
Yeah, that would be interesting. Are you kind of not looking at that because you're focused on just like the really high yield stuff?
Yeah, I think that really is the challenge of the blockchain industry. There's so many opportunities. You really have to triage it and go after the ones that A, you think are the biggest, and B, you have some competitive advantage. So we've been in the early stage venture space and the early stage token space. We've added some HFT trading in our liquid token fund. So we're trying to expand into adjacencies, and ultimately we will do some kind of yield-oriented fund, but we just there's so many other things we're trying to do that we haven't had time to focus on.
Yeah, makes sense. So you've mentioned you are kind of pretty actively trading these tokens, but like how active? Like is it like you're in these funds daily, shifting positions? Do you have some sort of bot that takes care of that? Like how do you manage all these tokens?
Yeah, so our main investing is venture style investing, where we're looking for good projects. We invest, we hold it for many years. So our early stage token fund, buy things like Filecoin and Polkadot and still hold them. So it's been a long time. Whereas in one of our funds, the liquid token fund, does trade, actively trade liquid tokens. And even in that fund, I would say that we are mainly making discretionary investments on things that we think will hold for, say, 4, 5, 6 months. And a good example was one that I started out with earlier is Bitcoin dominance. In January, we had a lot of Bitcoin, hit 70% dominance, and we sold Bitcoin to buy more DeFi type tokens. It's 8 months later, we're probably going to reverse that trade and buy much more Bitcoin and take down risk in other things. So that fund's typically making trades that are 6, 8 months type holding periods. However, 5 to 20% over time of that fund is a HFT quant strategy. So we're sucking in thousands of pieces of data and analyzing which tokens look cheap to go long and which tokens look rich to short. And that is traded with some order routing systems that are trying to communicate with, I think it's about 12 different exchanges to be able to trade typically every hour or so. Sometimes it's less frequent, sometimes more frequent. But we're trying to buy kind of the discrepancies, the kind of the inefficiencies.
Arbitrage.
Of which there's still yeah, there's still a lot of inefficiency in this market.
Oh, that's so interesting. Okay, so the main kind of most active fund is the liquid token fund. And within that, and how big is that fund?
That's 800 million.
800 million. Okay. And within that fund, you said there's 10 to 15% dedicated to these, this like high frequency trading strategy, which trades every hour, just focusing on whatever opportunity like to arbitrage there is in the market.
Yes. And, essentially our main constraint now is order routing, amongst all these exchanges. Sometimes tokens only trade on one exchange. It's kind of the technical issues of moving money around are the constraint to not make that higher than we would want it to be.
Interesting. Are you focusing mostly on centralized exchanges, or are you going to DEXs as well?
Both. We're both invested in and fans of both centralized exchanges and DEXs.
Oh no, but I mean like as kind of your platform to buy and sell these tokens.
So we do trade on both DEX and exchanges. Essentially, we have a dozen different exchanges we're trying to trade with, and whichever one's the cheapest, or we get the most volume through.
Got it. And then you said something else that was super interesting. You said right now you are looking to increase your Bitcoin exposure and sell some DeFi tokens. What is kind of driving this move?
It's essentially just a reaction to the change in the value of Bitcoin. It used to be 70% of the market. It's down to 44. And around here, it's worth increasing it. We've had a very low exposure to Bitcoin for the last 6 or 7 months in our liquid token fund, and it's starting to be time to add it back.
Interesting. So is it a matter of just looking at these levels and where they've historically been, or do you also look at things kind of more fundamentally? Maybe the DeFi market is, I don't know if you think has been overbought and maybe the fundamentals aren't there yet with the prices, or I don't know. Are there other things that you take into account to make these moves?
We're certainly still very bullish. DeFi is our main bet in our liquid token fund. It's just we've been massively underweight Bitcoin, having zero exposure in it. And since it's come down so much, it seems like it's prudent to put some of it back on. I think our liquid token fund's only averaged 17% Bitcoin over the 4.5 years it's existed, whereas on a market cap basis, it would have been 55%. So it's just, it's been down to zero is a very big bet, and we want to take that up a bit.
Interesting. Do you have like a percentage weight for Bitcoin where you think it should be for that fund?
Oh, it changes all the time. Over the last 6 months, it's been zero. It probably would go, and typically we don't own more than 20 or 25% in any token, so it'd probably go into the teens.
Got it. So, okay, and then on Bitcoin, what's your latest price prediction or forecast for this year? Do you have one?
So Bitcoin's grown 233% a year for 11 years, and that's essentially my normal forecast, is it'll just keep doing what it's been doing for a long time. It's had this huge downdraft, so I'm actually now more bullish than normal. I think, and we wrote this in our investor letters over the last 2 or 3 months, which are on our website if you want to check out the reasoning. But I think the downdraft in the price of crypto generally, and specifically Bitcoin, has been a bit kind of short-term issues, short-term, kind of panics, I would say. And the issues that we think drove the price down are all very, they're not likely to persist. And so it's gratifying to see that the market's already, regaining a lot of its losses. And I think, over the balance of the year, it's probably going to be very strong.
So, yeah, it looks like some of the drivers were like China earlier this year, ESG concerns, regulatory concerns. So of those, I've seen you explain why, like for each, you think it's it won't have a lasting impact. So if maybe you can go through some of those. I don't know, starting with environmental concerns. Why don't you think that will have a lasting impact in the public's perception of crypto and demand for crypto?
Yeah, so in the space of just a few weeks, some high-profile people like Elon Musk went from super bullish on Bitcoin to questioning, whether there's an environmental issue or an ESG issue. And so, we did a deep dive into the ESG questions on blockchain and Bitcoin specifically in our last letter. And I think the thing there's a bunch of points that are important, but if you want to start with just the first letter of ESG, environment is, Bitcoin does consume about 0.1% of all the energy, on Earth. So it's a noticeable number. The thing to keep in mind, though, is it's still pretty small relative to a lot of other industries. Bitcoin probably has about 50% of its energy coming from renewable sources, which is 5 times higher than the U.S. as a whole, where 11% comes from renewables. So the Bitcoin mining industry is hyper competitive, and it incentivizes people to find trapped sources of energy like hydro in areas that are too far away from urban centers to ship the electricity. So the kind of the new I would say probably excessive worry about energy consumption isn't well founded, and then a lot of the arguments against Bitcoin are based on papers. Like there's a very funny one where it says that Bitcoin itself will cause 2-degree increase in global warming, based on some crazy misunderstandings of Bitcoin, where thinking that the number of transactions drives the electricity consumption, and it isn't that way at all. That the number of transactions has nothing to do with how much energy is used. It's just a function of the block reward and how much Bitcoin is being supplied to the markets. And the important point about Bitcoin is every 4 years, the number of Bitcoins that are issued is cut in half. And so the amount of money that miners will have to pay for electricity will be cut in half every 4 years for the next 100 years. So there is essentially kind of a cap on the amount of electricity that Bitcoin can consume based on the halving. And even if the price of Bitcoin goes up a lot, say if it went up to $320,000 per Bitcoin in the next 12 years, that would be amazing. I think everyone in the industry would think that's amazing. That would still leave miners only the same amount of money as they have today to pay for electricity. So people that draw these upward sloping curves for energy, I think are missing how Bitcoin actually works. And then many of the other blockchains, don't use energy for security and, ease of switching to proof of stake. So the energy intensity of the blockchain industry as a whole has been declining. And then, once we go to E2, it'll be much less than it is today. So all those energy concerns, I think, are not well thought through. And then the hugely important point is Bitcoin and blockchain are amazing on the other two parts of ESG, social and governance. They're going to provide enormous benefits to, I think, literally billions of people on Earth over the next decade. And if you weigh all those out, blockchain's amazing for ESG. And that's a point, I think, over the next few years, when people really do the work and really think this through, they're going to realize blockchain's fantastic for ESG.
Yeah, I have to agree. So on the regulatory front, which has also been kind of one of the drivers of crypto recently. What are your thoughts there? I mean, are you concerned that the regulatory framework in the U.S. will start to become more unfriendly towards the industry?
Well, it's definitely a concern that we're always monitoring, and we try and help with policy bodies with providing facts and help educate. Our view is most countries in the U.S. have been actually pretty laissez-faire about blockchain. They don't really do much to help it. They don't do much to hurt it. And in the U.S., for example, most of the agencies ruled very early and very positively on Bitcoin and blockchain. The IRS ruled that it's property. The OCC allows nationally chartered banks to custody crypto. CFTC has always been very progressive. One of their commissioners came out to my house for a conference in 2013. So they've been, very progressive, and then with futures and all those things. So it really is just the SEC that still has to, work through, whether certain assets are securities or not securities, which is a complicated question. So most of the regulatory bodies will rule very favorably. So that's our central expectation that will persist.
Sure. So going forward, how do you think the macro environment will continue impacting crypto? So far this year, it seems that macro has been pretty favorable to crypto because, well, the pandemic incentivized all of these government aid programs and central banks printing a lot of money, and that money has gone in part to riskier assets like crypto. And I think there's also this social aspect of people being on their computer all the time, so spending more time buying digital assets, buying NFTs. And oh, by the way, I definitely want to get your thoughts on NFTs. Question after this. But so it seems like the macro environment has been pretty positive for crypto. Do you think that will continue, or how do you think it'll change?
Oh, I think all your points are spot on. That the macro really is driving crypto and essentially anything that can't be quantitatively eased. And the monetary and fiscal response to the pandemic has been literally off the charts. The amount of money the U.S. began printing in June last year is greater than the first 200 years of the country's existence. So we're really printing just an unbelievable amount of money. And it seems like, if anything, the size of policy stimulus is growing. So that, I think, has the inevitable impact of pushing up the price of anything whose quantity can't be eased. So obviously I'm excited about crypto and I'm long crypto, but other things like stocks, real estate, the U.S. median home price just had its biggest increase ever in the middle of a global depression, which seems to be indicative there's a lot of paper money out there chasing hard assets. We did a cool graphic on our Twitter feed and our website showing essentially the price of the U.S. dollar priced in quantities like barrels of oil, ounces of gold, grams of sugar, things like that. And it's pretty much the same story, that all those things are relatively constant with respect to each other. It's really the U.S. dollar, or paper money generally, that's falling. And so, those things that can't be quantitatively eased are rallying in terms of the number of U.S. dollars it takes to buy a unit of those things. But the flip side is to think it's paper money that's crashing. And if we, keep doing this, we're going to start pushing up inflation. Inflation is rising at a very fast rate now. And there's a lot of people that say, oh, it's just kind of a base effect, or it's just, something temporary. There's a lot of tightness in the labor market because of essentially disincentives to work. So we have a labor shortage in the middle of a pandemic, which is an amazing outcome. And so wage rates are rising, and then those feedback into the price of goods. And so I really do think that inflation is an issue. And this comes from somebody that's always been, early been an advocate of the secular decline in inflation and the secular bull market in bonds. So, I'm not, some kind of person that's been raving lunatic about hyperinflation for decades. But right now, I think the world's just changed. There's an enormous amount of money being printed, and it's, fueling the price of everything. And a great proof of that thesis is the S&P 500 hit a record high in the middle of a global depression. I mean, that's clearly from tons of paper money chasing a fixed number of assets.
So if that's the case, how sustainable is it for crypto? I mean, if this money printing is what's driving prices right now, it doesn't seem like that should be kind of the long-term value for crypto, right? Like it just seems to me that if there's this like big balloon of like fiat, it just like going into all these assets, at some point that has to pop. Do you see that like happening for crypto?
Well, I hear what you're saying, but what I would argue is it's a step up in the quantity of money, which then changes the price of everything, whether it's, silver or gold or oil or median home price. I can't imagine that the government would ever take that money back. Like they might stop printing more money, but I don't think they're going to do any kind of deflationary policy. So it's kind of a step function. We're going to pump up the price of everything: housing, S&P 500, Bitcoin, Ethereum, whatever. And then they might stop printing more money, but we're at kind of this new price level. So, while this impetus might stop at some point, and it feels like it's going to keep going for a while. When it does stop, I think it will be at a new price level for cryptocurrencies.
Right, and then the stabilizing factor would come from so there won't be any incentive to take money away. Like maybe like central banks aren't going to raise rates super high or anything like that. But I guess the stabilizing would come from people just demanding less assets, just, because that money will be used to for more like productive things and just like buying crypto.
Yeah. My argument would be we've been bullish on crypto for 8 years, and way before the pandemic, way before the money printing, because of all the underlying wonderful things that are happening, remittance payments, all those things they're going. And once the money printing is over, all those things will still be happening. We'll still be wildly enthusiastic about blockchain. It's this era, which, it's been 18 months, might be another 5 years, who knows? But there's going to be an era where monetary stimulus just kind of resets the price of everything on Earth. When that's over, the main driver will go back to being technology, the number of people using crypto, DeFi, all these other things. It's the monetary stimulus is just kind of like an afterburner that's pushing this thing faster than it would otherwise go. But when it stops burning, we're going back to all the other arguments that one would want to own crypto.
Yeah, makes sense.
And one thing we try and do is kind of keep things in bigger picture historical perspective. And we have a graph of the price of Bitcoin all the way back 11 years, graphed exponentially. So you get a compound growth rate. And it's been pretty consistent. The average has been 233% a year. And there's been some bubbles and there's been some bear markets, but over the last 11 years, it actually grinds up at a fairly consistent rate. And because of the fall we've had in the last few months, Bitcoin as a proxy for the industry is 32% below its 11-year compound annual growth rate trend. So it doesn't feel like we're in a bubble. And given, if you would have told me a year and a half ago that we were going to be doing trillions of dollars of stimulus every year in multiple trillion-dollar packages, and Bitcoin was only 45,000. I was like, wow, that's cheap. So I think given what's happened, to still be below the long-term trend line is pretty remarkable, and that's why we're more bullish than normal on crypto.
Super interesting. Yeah, I saw that chart. It does look like we're not in bubble territory yet compared to like 2017, 2013. So, and I guess like tying back to the question I made earlier, like, so what is your price target? Like how, you said you're more bullish than normal. So how much do you think Bitcoin will gain and to what price?
So yeah, Bitcoin's average tripling every year for the last 11 years. I think in a year's time, it could be 150,000. I think that's quite doable.
How about for ETH?
Oh, I do think ETH probably will outperform. So, 10,000, in a year's time could happen.
Sorry, and those predictions are for end of 2021 or like 12 months from now?
12 months from now.
Got it. Okay. Why do you think ETH will outperform BTC?
There's so much being built on top of it, and DeFi is mainly powered in ETH. And I just feel like over the next year or so, there's going to be more interest in ETH and DeFi than Bitcoin. And this is subtle. It's it's not like I think they're both going to go up a lot, but our fund is making a bet that ETH and DeFi will outperform.
So are you're overweight ETH versus Bitcoin right now, like overall?
Yes, very much so.
Okay. What are your thoughts on NFTs? Like, are you investing in NFT platforms or on kind of tokens themselves? Like, do you own any crypto funds?
Yeah, so it's a great question, and I think NFT is very important space, and I think like any kind of new, really disruptive thing, there's going to be some amazingly important things created, and then there's going to be a lot of stuff that ultimately isn't important. And we've seen that, like the .com boom. There's a couple of really important companies that came out of it. A lot of companies went to zero. The ICO boom, in 2017, kind of similar. Frankly, I think that's likely to happen in the NFT space. We're investors in Maker's Place and some other projects in the NFT space that provide infrastructure, foundational products for NFTs. I think that's a great way to play it. In terms of investing directly in NFTs, I do think there's a lot of speculative frenzy, and a lot of the things that are being bought, I question whether they're going to have long-term value. And I guess my perspective would be that there are some NFTs being created that can only be done with blockchain and can only be done in this format. And those, I think, are revolutionary and going to have incredible long-term value. The other things that could be done kind of in the normal world, and that's kind of like, Bitcoin and blockchain 5 or 8 years ago, everyone was trying to do, XYZ business model, but with Bitcoin or, with its own cryptocurrency. And there's no need to have blockchain, or no need to have their own cryptocurrency. And that's what I'd see here in the NFT space. There are some artists that are doing things where the artwork evolves over time, like with AI interacting with it and changing and evolving. That's really cool. Performance artists doing work where the fan interaction changes the piece of art over time. Those kinds of NFTs, I think, are wildly interesting. I think are going to, when we look back 20 years from now, they're going to have been the important ones. The ones that are just, kind of something digital that, like a sports thing, or, I'm a little more worried with it. Those are going to have lasting value. It's like modern art, 80 to 100 years ago, Marcel Duchamp put a urinal on the wall of a Paris gallery, and now that euro is worth $150 million. So, when people have a good idea that, hadn't been done before, yeah, it's going to have a ton of value, but those are going to be rare.
Got it. Perfect. Okay, and then to wrap up, what are you most excited about that's happening? Like of all the things that we discussed, I mean, we talked about a lot of exciting things. What's going on Eve, DeFi, NFTs, Bitcoin itself. What's most fun and looks like most promising to you?
Well, from an investment standpoint, I think DeFi is still the most interesting, and our biggest bets are in DeFi. And then from just kind of an industry standpoint, we're a fund manager. We're talking to lots of investors. We've been talking to people for 8 years. I'm really interested to see if this wave of institutional interest that we're seeing now really kind of changes the industry to kind of a whole new level. My intuition it will, because it feels like there's some really massive entities that are thinking about putting some very big investments into the space, but it's going to take 12 months to kind of work through the system to see. And so, if you're nice enough to have me back on the show in a year, it'll be fun to see whether that happened as well.
Oh, so interesting. So if you can kind of give a sense of what kinds of institutions are looking into the space, and how do you think that could change the blockchain industry?
Well, just an example, I was talking to a very big 100-year-old firm yesterday, and I had met with them 4 or 5 years ago. I met with them a couple of years ago, and they said that their previous CIO had said, no chance in hell of investing in blockchain, and for whatever reason, they have a new CIO, and it's all go. Got to get invested in blockchain. Got to find out.
Oh wow!
And so we do see a lot of those. Big institutions we've been talking to for a long time that really just kind of had no chance of investing. Now really flipping around the other way, and you've seen it on Wall Street, right? The big Wall Street firms for a long time try to keep blockchain at bay, and Morgan Stanley, JP Morgan, a lot of firms are now offering Bitcoin or blockchain products, right? So we're doing a complete 0 to 1 switch from institutions trying to avoid blockchain to really having to get involved. And again, I don't want to jump up and down and say I know this is it, and it's definitely going to be every institution changing, but it just kind of feels like it. My intuition is over the next 12 months, there's going to be some really big institutions make meaningful commitments to the space. And, it is still a relatively small space. It's $2 trillion in total assets. If some of these big institutions come in, it really will move the markets.
Super interesting. Awesome. Well, that's a great place to wrap up, I think. Dan, this has been amazing. Thank you so much for joining me again. It was great.
Hey, thank you so much. It's been fun.